Gladstone Investment Corporation stock, ticker symbol GAIN. This stock has gone up and down quite a bit year to date, but down the line the stock price is still the same as the beginning of this year. On the 8th of May, Gladstone presented their quarterly earnings where they missed on EPS but beat on revenue. People love Gladstone investment stock because of multiple reasons, one of them being the dividends, and I understand why with dividend yield at 6.7%, and of course the monthly payouts. Looking at the 5-year return including dividends, we see that GAIN stock matched the S&P 500, which is pretty impressive. So could this be the perfect moment to buy Gladstone Investment Corporation stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Gladstone Investment do? Gladstone Investment Corporation is a business development company. The company's investment objective is to grow current income by investing in debt securities of established businesses that will provide stable earnings and cash flow, and provides its stockholders with long-term capital appreciation by investing in equity securities. Looking at the earnings highlights, we see that investment income increased 2.5% quarter over quarter. Expenses increased 37%, which doesn't look too exciting. Net investment income decreased 45%, also not looking good to me. The net investment income per share was reported at 0.15, down 46% quarter over quarter, so we're off to a bumpy start. The net asset value per share was at 13.43, up 3.2%, which is finally something good. In here we see a screenshot of the previous investor presentation. The annual portfolio growth rate is at 7.4%, which is a great number in my opinion. However, the net asset value is growing at 4% annually, so this is something that I don't like. It is not growing alongside the investment portfolio. In here we see that Gladstone really likes to pay a supplemental dividend, which can really add up in the long run. The regular dividends also grow 4% annually. And for companies like Gladstone, the return on equity is a really important number. Gladstone is outperforming industry peers with this number, which is really nice. And now that we know a bit more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Gladstone is a 515 million market cap company. PE ratio is at 6, indicating they're undervalued. Later in this video I will show you my 3 price targets for Gladstone stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 79 million, and in this graph we see that revenue went up in the long run. Of course we see the impact during COVID, and most recently revenue is increasing again. Both the gross margin and operating margin are decreasing over a longer period of time. Net margin is going up and down a lot. To me this doesn't look really good. I prefer a bit more steadier pattern here. EPS is pretty much the same story as the margins, nothing special to add here. Analysts expect that EPS will decrease in 2024, and after that they expect EPS to slightly increase. For the revenue, analysts expect 5 to 6% growth in the coming 2 years, and after that they expect revenue to stay flat. Return on assets is sitting at 9%, which is a great number. Return on equity is reported at 17.3, which is a great number. This is also one of the most important numbers for Gladstone Investment Corporation. Current ratio is at almost 0, which is not really a good sign. I prefer this number a little higher, to be honest. And right now Gladstone has almost 400 million in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Gladstone has 2.5 million in total cash, so they can't pay down a big part of their debt. To me, this could be a potential red flag. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up and down a lot. I prefer a steadier pattern here, so definitely keep an eye on this number. Shares outstanding are increasing in the long run, which is something that I don't like in general. But companies like Gladstone issue new shares to raise capital, so I don't mind that much. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 6.7%, which is a great number. Keep in mind that Gladstone pays a monthly dividend instead of a quarterly dividend. Annual payout is at $0.96 and payout ratio is at 39%. I prefer 50% or lower. So right now they have 61% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at 9.6, which is a great number. They have increased the dividends for 2 years in a row, which is also nice. And if you take a look at these numbers, the dividends paid since 2012, you see that Gladstone did increase the dividends at a high rate. However, during the lockdown periods, they cut the supplemental dividend, which was a smart move but ended the growth streak. In this graph we see the expected dividends in 2025 and 2026. Of course, this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's a bit diluting with the supplemental dividends, but it is expected to be roughly the same as the past years. And overall these dividends look really good to me, but how about the historical returns? I decided to compare Gladstone stock with the overall market, in this case the S&P 500. On the 5-year chart we see that both GAIN and the S&P 500 had 100% return, but the S&P 500 did a slightly better job here. It has to be said that it is quite impressive to GAIN having this massive return. And keep in mind this is including dividends. On the 1-year chart things look pretty interesting. Again we see a similar return, but this time GAIN has a slightly higher return versus the S&P 500. On the 6-month chart we finally see a difference, but unfortunately it is the S&P that is the big winner here, with 18% return versus only 6% return for Gladstone. On the 6-month chart it is again the S&P 500 that's the winner here, but it has to be said that it is pretty close again. So bottom line, the S&P 500 did a slightly better job in the long run, and in the short run it is also the better investment. But I'm quite impressed by Gladstone to be honest. So could this be the perfect time to buy Gladstone stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For revenue growth I'm filling in 4, 6 and 8%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 80, 85 and 90. For the free cash flow margin I'm putting in 10, 12 and 14%. For the PE ratio I'm putting in 5, 6 and 7. And for the price to free cash flow I'm putting in the same numbers. My desired annual return is 15% since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety with this company this time. Right now Gladstone Investment stock is at $14.3. I hit analyze and we see a lot of red numbers, but I'm more focusing on the multiple earnings value. We have a low price target of $13, we have a mid price target of $16.3 and we have a high price target of $20. To me the low to mid price target is the most justified here. So that means they are in the middle of this range, of these price targets. What do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on Gladstone Investment Corporation is that it is a risky investment. It's a smaller company that doesn't have a really long proven track record. However, it is quite impressive that they managed to match the S&P 500 in terms of total returns. Most fundamentals look pretty decent, but it is a little harder to evaluate this company, to be honest. From a dividend point of view, I think it is really interesting, with a high yield but also a lot of supplemental dividends, and of course the monthly payouts. From a value point of view, things don't look that bad either. For now, I'm adding them to the watch list, and I will add shares whenever the stock price goes down a lot. Just have a little extra margin of safety. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.